Back to my channel for another little video of analysis. Today we will be looking at West Texas oil. Also the symbol is WTI, US dollar. So this is the price per barrel against the US dollar. So current price right now is, if I could see it, we're 48,912. So let's get straight into it. I am currently sitting on the monthly chart. And if I just zoom out, I mean, I was very zoomed in there, but oil for the last few years here, we've just really seen a sort of some big sell-off, and more or less oil's just been moving sideways really for years. This was around 2008 crash. Now what we have seen though in this previous sort of year or so is the market has just been consolidating around here. And if we can take it here, we've been really trapped in, you could almost say, between $55 a barrel and $40 a barrel, between this $15 barrel range. And the market's just been hovering in and out. We got a false breakout, pulled back in. We weren't able to retest 55 a barrel, but we did go sideways before pulling back. But what I have been looking at is the analysis is pointing towards higher oil prices. And I'd like to run through some analysis today to show you what I'm looking at. And I've actually got a live trade running on this pair right now, on this commodity. So if we have a look, so last month in July, we had a very, very strong close on oil, and we came right back up and closed at $50 a barrel. I mean, you can have a look there. We closed at 55.9, so we closed basically 6 pips above, 6 points above $50 a barrel, with a very, very strong close. And if we take this almost in a sort of context where we can see at times where we have bounced before off this $45 barrel, we have seen in previous times where price can actually move from. I mean, another example sort of thing is the strong close that we had and followed through another strong, very strong month of buying momentum. Now on this monthly, we've actually also got a 3-pin formation off this $45 a barrel with this very strong month. Now the monthly does lag a little bit compared to the other other time frames such as the weekly and daily, but it still holds a very, very key strength in my eyes, and I am anticipating higher prices in oil. But let's dive in and let's jump onto the weekly. So you see this weekly that we had this strong week, and then we hit $50 a barrel. We formed a bit of a spinning top from there, and we've pulled back, and it looks like we're moving higher. Now, if you just run this cursor over where that where the low of this is, you can see it does cluster with previous sorts of areas. So it's a sort of, it'd be more of a daily level. It's not so much a weekly level, but there is some area of interest. So I do like the look of it. Currently our moving averages are around the wrong way, but you can see they're starting to close right back up. So I think oil is looking very interesting. Now let's jump down and we'll have a look at the daily. And you can see here just this sort of, it's just a zoomed in picture. It just shows how oil just consolidated, and then we've had these nice, really nice waves. But we can see now that this wave structure has actually been broken. We had a lower high followed by a lower low, followed by a lower high, followed by a lower low. Now we haven't taken out these previous lower highs, but we are starting to trend back differently in a different wave formation than what we previously had done. I mean, you can see here how nice the market had been respecting this and was just selling off. Now we are starting to swing back round, and if we have a look at this and we break it down, we can see here that we've actually made a lower high, or a higher low, followed by a higher high, followed by a higher low, followed by a higher high. Now, what I had been looking for, I actually taken a trade yesterday on oil, and very, very tight trade, but we can see here we've got this daily level, just where price just keeps on hitting and bouncing off from. And you can see where it kind of matches up in previous sorts of price action without, you can just see where current price sits. There's some sort of levels, when we come up to around these $50 barrels, we can enter some sort of range as we build pressure with people buying and selling out of the market, etc. Now, yesterday's daily, I wasn't too happy with the close, as we do look like it's sort of a shooting star, indicating we could get a bit of a pullback. So I am monitoring this. But what we'll do is I will show you, if we jump out of this chart and we go have a look, I had actually taken this on the 2 hour. And what I was watching was we had this this counter trend line, and this is that level that I've been talking about, this sort of area of where we just keep on testing it and rallying from there. Not so much a strong rally, but we do have it's a reaction point. And now we have our counter trend line. We have 3 touches, and then we actually had this here where we had taken from this 48.50 a barrel. We came up, we pulled back into and the MAs clustered right up. Then they crossed over the right way and formed this nice sort of strong candle. So I actually took a long from here. It wasn't so much a textbook style setup, as if like we didn't have a break and a strong close above this counter trend line, but I was happy with where price sat, and I thought that what we're doing right now is we're just creating sort of a box formation breakout, and we're just building up pressure from what I'm reading of the monthly and the weekly and the daily. We're actually just building up pressure before we retest this 50 and then potentially break above or pull back and another cluster or something above below the $50 a barrel, sorry, and then a breakaway to move higher. So what I had done is I had put my stops just in 15, I'd taken 30 pips below this level. So in my eyes, if I can envision this market coming back down to retest this level, then if we breached this and pulled back deeper, then I know, I have a general consensus that the market is heading back towards 47 a barrel. Oil can play you like that. It's a little bit different to the currencies. So right now the trade doesn't look super healthy with these strong wicks to the upside. But what I do believe is that there are some buyers coming back into the market, and we actually had this breakout, and I had just taken this trade, and we got this. I remember seeing this rally, and I thought, oh, cool, this is already kicking off. But the way how we closed, I did think that we'd come back and see a pullback, and oops, wasn't supposed to do that. I was actually looking to extend this. So I was actually looking to see if we could break out, retest, and then move higher. So that could have been a trade setup, but I've just gone in early, and I've gone in with a 2% risk on this trade. Now we can see where we actually tested the previous day's highs, and we had spiked through them, and then either we must have triggered in some more short positions, and we've just had a bit of a sell-off. But once again, I still feel confident that we have this level that's still protecting us, and the previous day's low has not yet been breached. We still are in the quietish stage in the markets, as it's currently 1:30 p.m. in the afternoon here in New Zealand. So overseas, such as UK, it currently would be like 1:30 or 2:30 a.m. So it's the middle of the night for them. But I am looking to I'm watching this market for another spin round. I won't be taking another position on this until we break and clear above $50 a barrel. And in that case, I may be able to trail my stops up to break even, depending on where price sits. But currently, so this is a 113 pip stop for a potential it's a very large target of 55 a barrel, which is 575 pips. Now this, I'm not expecting this to happen overnight. Like I said, the top-down analysis is from the monthly, and the monthly has, from me reading the monthly, I am looking for higher prices in oil, so it may take a month of price action to potentially get there, or as we might see it, we might come up and hit that range just before we hit 55 a barrel and start to sell off. My trade plan would be to trail my stops on the way up and leave the trade running for as long as possible, capturing the amount of as many pips as that I can. So the risk to reward for this is actually 1 to 5. And like I said, the stop is quite tight, and the target is a large target. I mean, it's 500 points from $50 a barrel, and we're still currently trading at 48, or just under $49 a barrel, so we're still 100 points to 50. So we're still, it's an interesting setup, and I did want to take this trade here because I did like the look of where it sat at the time. Now I don't like these wicks that are rejecting, but I think that's just some sellers trying to whip the market back down. But I do believe they're going to potentially be taken out, or like I said, we may see a deeper pullback, which then we do have this 4-hour or daily level to protect us. Plus, we've got a couple of daily lows to protect us, where we could have seen people's stops trailed up to where their stops are. If we do fail and we breach our stop, then I would be looking for price to pull back to 47. I most likely wouldn't take a trade on the pullback stage, because we are I mean, I am looking for this at higher prices. I mean, you can see the sort of price action that can go on before we have a strong rally such as this here. So that is what I'm looking for, where we are going like this, breaking above and moving higher. But once again, I will keep an eye on the trade. I'll manage the risk the best I can, and I will post a separate video of the results and what sort of, how I managed the trade and what was the result at the end. But thank you so much for watching, and if you like the content, please like and subscribe, and we'll speak to you soon. Thanks.